In today's world, most SMEs are like track and field stars. They're high hurdlers. They're having to overcome lots of obstacles to find and achieve success. Well, our next presenters are going to demonstrate a seamless solution to allow SMEs to access essential capital that they need to succeed. Ladies and gentlemen, please give a warm welcome from India. Please welcome ftcash. Let's hear it for him. Come on, hands together.
Good afternoon, everyone. My name is Deepak Kothari, and I'm the co-founder of ftcash. Did you know that the bank's loan portfolio in the UAE region, only 4% of that is actually garnered by SMEs? ftcash aims to improve access to credit for SMEs by empowering banks and institutions with the necessary and relevant tools. For example, in the UAE, there are anywhere from 300,000 upwards SMEs, which consist of 92% of all businesses. They have an extremely high share in the retail and trade segment, yet when it comes to the loan share, they have a very minuscule percentage. We identified 3 key drivers or key obstacles for that from the bank's perspective. Small loans have a very high origination and a very high service cost. The ability to assess credit risk as well as monitor it on a real-time basis is extremely difficult for a financial institution. Third, and the critical factor, in our opinion, was the fact that traditional lending products, which are EMI-driven, which require the SME to make payments on a particular date, lend themselves to default. At ftcash, we created a unique integrated and payments lending product. On the lending side, the product is a data-driven product, which is collateral-free. It has an instant disbursal, and at the same time has flexible repayment options. On the payment side, we have a one-stop shop solution which integrates across hardware as well as software and has a dynamic KYC as well as an onboarding solution which is fairly swift. It works across the various form factors, like I mentioned, starting from mobile payments as well as QR code. And in the case of merchants like schools and establishments, it also has an invoicing and billing platform. On the lending side, we have a line of credit which is pretty much similar to a dynamic credit at the time of disbursal. And this is primarily generated from the transactions data. Let's take the example of a bank. The bank wants to assess, on the basis of their existing merchant base, what is the line of credit that they can offer. They can identify the minimum criteria as 25,000 dirhams. And on the higher side, they can say they want to lend 100,000 dirhams. The systems will use the transactions data to generate a list of merchants and the eligibility value for each of these merchants. The credit analyst can then actually drill down on any of these merchants, and he will actually have a dynamic dashboard which will have all the details in one single page. It will provide him his credit score. We also do a psychometric test to evaluate the merchant's intent to pay. While we are capturing the ability to pay through transactions data as well as the credit score, we're measuring the intent to pay from the psychometric score. In addition to that, we also capture data of the merchant in terms of bank statements and other stuff. On the bottom of the page, we'll see that the credit analyst can see what is the loan eligibility. He can either choose to approve, defer, or reject that loan. The repayment, like I mentioned, is slightly different as compared to a traditional lending product, which has a single-day payout. In this case, the repayment happens on a daily deduction basis. So on day 1, if customers pay 1,000 dirhams, 250 dirhams in this particular case will go towards the loan, and 750 dirhams will go towards the merchant. This assists the SMEs who are not that fiscally prudent, and the institutions can ride the wave, where in good months they're deducting a higher amount, and in small months they're deducting lower amount. Our journey so far has been fairly interesting. We've worked with about 25,000 merchants in India, and we're processing about $80 million in volume. We we work with some of the large private sector banks, as well as the new and old age NBFCs in India. We're outside and happy to answer any questions. Thank you.
Stick. All right. So judges, over to you. Questions, please, Liz.
So right now, your only clients are based in India.
We're currently based in India,
Yeah,
yes.
And you're looking to expand globally.
Yes, we're looking to expand in the UAE market.
Okay.
So how are you going to do KYC there? Because in India they have Aadhaar, which kind of helps you to do online KYC. What is your plan for countries who don't have national ID?
So for countries where there is no national ID, you're right. In India, we have the Aadhaar, wherein we can do the OTP-based KYC. We're planning to use quasi-KYC metrics. So for example, if a merchant has already done his KYC with a bank, and we can identify that the merchant's bank account is validated and authenticated, then we're looking to use that KYC.
So will it be approved by the regulators? Are you expecting for that?
We have to talk to the regulators from the perspective, because we do understand in the UAE context, it requires a bank branch visit to do a KYC. But since we're looking to work via the route of directly with the banks, we're assuming all the merchants would already be KYC enabled.
But if you increase your cost of operation, then your efficiency gains you can pass to your client.
But in this case, we're not directly acquiring the merchants, unlike in the Indian context.
Sure.
So we're going the route wherein we're partnering with the banks, in which case, in one single shot, we get the entire merchant base of the bank, and all of them would be KYC enabled.
Just give a quick insight into your intent monitoring. What exactly, how you do that intent check?
Very good question. So what we realized is that the ability to pay is very well captured in transactions, but we also wanted to measure the intent to pay. So for example, we'll ask basic questions trying to assess whether a merchant or an SME is actually somebody that takes responsibility for his own actions, or he's always blaming somebody else or the circumstances. We'll also measure the fact that is he an impulsive buyer, or is he somebody who believes in delayed gratification. So for example, the question could be that if you had a good month and the Apple iPhone 8 has just launched, would you buy the iPhone 8, or would you rather wait for a few months, and so on and so forth.
Thank you.
Any other questions? Panel? Yes, Emilio.
Just, you mentioned that looking at your current model in India and moving into the MESA region, they would be potentially partnering with banks.
Yes.
Any other challenges that you see in moving your model outside of India and into MESA, which is, each country has its own unique regulatory challenges, and also from an operating perspective that you see in scaling it across the region? Any other challenges that you foresee?
I think it's an interesting question. So the conversations that we've been having with the MESA region as well, we do understand that banks traditionally have focused on security or secured lending, and unsecured lending is something which is not really to the scale that, let's say, is there in some of the other markets. And we're trying to identify partner banks who would be willing to take that plunge, wherein they're actually doing lending which is based on alternative data and not really an underlying asset.
I think there's a quick question on here. I think one of the challenges of micro lending has been the lack of risk product like insurance, micro insurance. And if you don't pair the lending with the insurance product, long terms tend to be a bad story. Have you thought about it?
So we have actually done a small pilot wherein we're trying to do exactly what you're saying. But since it's a pilot in the Indian context, what we're doing is trying to, the people that we're giving loans to, also giving an insurance product to them. So in case there is any adverse situation for the business or for the proprietor, because a lot of SMEs
how you're creating price, how you're modeling those price for the insurance?
So what we've done is typically what we've said is that it's a combination of a product, and the insurance product value is deducted from the loan amount itself. So we end up giving a higher loan, and the loan disbursal is for a slightly lower amount, wherein the value of the difference goes towards the person who's providing the insurance product.
I see. Okay. Thank you.
Yes, Omar.
You mentioned that PayPal is backing your company. Is that correct?
Yeah. So we were incubated by PayPal in the Indian context.
Sure. And what is your expansion plan and adoption plan for the rest of the world?
Sorry, for customer acquisition?
No,
What is your
to expand globally.
To expand globally. So recently we were also a part of the MasterCard Start Path program. So we're working with MasterCard as well as some of the other players to see if we can expand to other markets. Our growth for the global market is primarily trying to work with partner banks and institutions so that we don't really need to put boots on the ground, because we do understand that every market has its own dynamics. So it's primarily important that you have a local player who understands the market and understands the dynamics, and you can provide him the technology and he can be the implementation partner.
Okay. Yes, Salim.
Your problem statement talks about collecting these non-traditional qualitative and quantitative data sources. How do you establish the integrity of the data source, and what sort of authentication factors do you put into place to make sure that the integrity of the data source is not compromised?
So one of the things is that when we collect data from the banks, we use APIs, so we're directly sourcing the transactions data from the bank. We are collecting a lot of alternative data, like you mentioned.
So if the integrity at the bank end is not intact, then you'll be getting exactly what the bank gives you, correct?
So one of the things that we do is obviously the system is able to identify patterns. So if there is, let's say, a certain flux in the pattern where there is a certain spike, and the system will throw up an alert which says that this transaction pattern is something which is not a regular pattern. So an analyst can then look into it.
To the best of my knowledge, I know there are things that border on foolproof now against fraud in the marketplace, like, especially on the multi-factor authentication for data. That does exist today.
Yes.
How come you've not taken that into account in your solution?
So in terms of when you say foolproof data authentication, so
what I'm trying to say is whether it's digital identity, whether it's any type of data you're collecting, remember, if it's garbage in, it's garbage out, correct? So obviously the source is of paramount importance in terms of making sure that the integrity remains intact. It's that particular point that I'm addressing. How do you address it in your solution?
So in our solution, typically, like I mentioned, let's say if it's the case of transactions data, it's coming from the bank.
Just telling you get data from the bank is not good enough, you know, because if it's not correct coming in, then it makes no difference how big the bank is. You know, you'll be getting incorrect data in.
But typically what we do is we're not really like downloading streams of data at one shot.
Okay.
So every transaction that happens on a real-time basis will flow into the system.
And
So if there is, let's say, any sort of spike which happens where there is, let's say, data, the system will throw up an alert that data which is coming through is not really, let's say, like you said, there is an integrity issue with the data. And that is something which can be flagged off by the system.
Okay.
Okay.
Thank you, Salim.
Thank you.
Ladies and gentlemen, can you please put your hands together for ftcash?
Thank you very much.